Okay, I'm back. Samantha got back to me on the AWS custom cooling and its impact on Modine and Vertiv stocks. Here's the report she gave me. You can see it's about 3 pages long, and she goes into detail and tells me exactly what this is all about and what's happening. And I'd like to share it with you. So let me go over and go to the document she printed out, and I'm going to put it on read aloud.
AWS
So
custom cooling and its impact on mod and VRT stocks.
This is Samantha.
Stocks.
We have a little issue here.
AWS unveils the IRChex cooling system for AI GPUs. This week, Amazon Web Services, AWS, revealed a new in-row heat exchanger, IRChex, cooling system designed to handle the intense heat from NVIDIA's latest AI GPUs. The IRChex combines liquid and air cooling. Chilled liquid circulates near server racks via cold plates on the chips to absorb heat, which is then expelled by fan coil units. AWS developed IRChex in just 11 months in partnership with NVIDIA, aiming to cool high-density GPU racks without major data center renovations. AWS VP Dave Brown noted traditional cooling would have wasted floor space or water. In essence, AWS built a custom liquid cooling solution as an alternative to the off-the-shelf cooling systems that companies like Vertiv or Modine typically provide.
Has anybody told you about that? Let's look and see what is the immediate reaction.
Immediate market reaction. Vertiv and Modine shares fall. Investors reacted swiftly. Vertiv Holdings, VRT, a leading data center power and cooling provider, saw its stock plunge after AWS announcement. On Thursday, Vertiv shares dropped between 6% and 11% intraday. Investing.com reported Vertiv fell 11% the day after AWS introduced IRChex, and a Benzinga briefing noted traders' fears that AWS in-house solution could replace third-party cooling gear. A Bloomberg intelligence analyst explained why AWS move spooked Vertiv shareholders. Roughly 10% of Vertiv sales come from liquid cooling, and AWS may be one of the largest customers. So AWS building its own system could weigh on Vertiv's future growth prospects. In short, the market is concerned Vertiv might lose a chunk of business if hyperscalers like AWS forego buying Vertiv's cooling units. Modine Manufacturing, MOD, another thermal management company known for its Airedale data center cooling solutions, e.g. chillers, air handlers, etc., also saw its stock decline. On the same day, Modine shares dropped on the order of 6 to 8%. Like Vertiv, Modine is deeply involved in data center cooling. Its climate solutions unit, which includes data center cooling, saw sales surge 119% last year to $644 million. Given that success, AWS self-reliant cooling strategy likely raised worries that major cloud operators might buy less from third-party cooling vendors. In other words, AWS solving its heat problem internally could mean potential future headwinds for suppliers like Modine and Vertiv, which helps explain why both stocks were down yesterday. Long-term effects on Vertiv, VRT, and Modine, MOD. In the long run, will AWS move hurt these companies? It certainly introduces uncertainty. If other hyperscalers like Google, Microsoft, Meta follow AWS in developing custom cooling hardware, big customers might reduce orders from Vertiv, Modine, nVent, and others in the cooling business. However, analysts urge caution before writing off these suppliers. Citi, for example, argued the sell-off in Vertiv and similar names was overdone, noting that Vertiv's competitive advantages remain intact despite AWS news. Vertiv still has a market-leading portfolio in power and thermal management, global service capabilities, and strong relationships with chip makers and data center clients. Those strengths won't disappear overnight, and not every cloud provider will reinvent the wheel as AWS did. Crucially, demand for advanced cooling is exploding due to AI. Cooling high-wattage GPU racks is a growing challenge industry-wide, and liquid cooling is expected to boom. Citi points out that liquid cooling could grow from 15% of data center cooling today to 30% by 2027. Vertiv and peers like Modine are positioned as primary beneficiaries of this expansion, since they offer a range of liquid and hybrid cooling solutions. In fact, Modine just reported record results largely thanks to data center cooling demand, and Vertiv's backlog and orders have been strong prior to this news. Bottom line, AWS DIY cooling may trim some future revenue opportunities. Indeed, Amazon was likely a big account, but it doesn't necessarily spell doom. The overall market for cooling AI data centers is growing so rapidly that Vertiv and Modine can still thrive if they continue innovating. Their stock drop reflects a knee-jerk fear of losing one customer and a broader trend of cloud giants taking more control over infrastructure. Longer term, if these companies adapt, for example, by offering even more efficient systems or servicing needs that even in-house solutions can't easily handle, they can remain key players. In summary, the AWS news created a near-term overhang, but many analysts feel the long-term growth story for MOD and VRT is intact, making the sell-off a potential buying opportunity rather than a permanent setback. Other new cooling innovations addressing data center heat. The race to cool AI hardware efficiently is industry-wide, and AWS isn't alone in seeking new solutions. Other firms are indeed developing novel approaches to the data center heat problem.
Okay, now listen to this.
Microsoft's zero water cooling. In 2024, Microsoft unveiled a new data center design using a closed-loop liquid cooling system that consumes zero water by avoiding evaporation. Fluid runs through cold plates on chips and back to chillers in a sealed loop, so unlike traditional cooling towers, no water is lost to the air. This innovation lets Microsoft cool high-density servers for AI while drastically reducing water usage, an important sustainability goal. Google's heat reuse and efficient chillers. Google has partnered with Danfoss to upgrade its cooling tech. Danfoss is supplying oil-free turboker compressors, high-efficiency chillers for Google's data centers, and designing heat reuse systems so that waste heat from servers can provide heating for on-site facilities or nearby communities. In other words, Google aims to recycle data center heat as energy instead of just dumping it. This kind of heat recovery not only improves overall efficiency, but also turns a cooling problem into a heating solution for others. Immersion cooling. S.F.Mahaney and others, a more radical approach gaining traction is immersion cooling, where servers are literally submerged in special non-conductive liquids. This method can achieve far better heat removal than air cooling. For example, Barcelona-based startup S.F.Mahaney now works with Intel and Dell on immersion cooling systems. By dunking servers in coolant, data centers can cut energy use, fans are unnecessary, and pack chips more densely. S.F.Mahaney's growth from a skeptical idea into a multi-million-dollar business underscores how seriously the industry is exploring immersion technology. Other companies like Green Revolution Cooling, GRC, and Isotope are also providing immersion or direct-to-chip liquid cooling solutions to tackle the thermal load of AI hardware. Other custom hardware initiatives, beyond cooling equipment vendors, the cloud giants themselves are innovating. Meta, Google, and Microsoft are investing in custom chips and infrastructure that include bespoke cooling designs. For instance, Meta has experimented with new rack designs and AI-specific hardware that optimizes power and cooling, while Microsoft's upcoming data centers plan to run hotter, allowing server inlet temperatures in the high 70s degree F to reduce cooling stress. These moves all reflect a trend. The biggest tech firms are rethinking every aspect of data center cooling, from advanced liquids and refrigerants like glycol blends to AI-driven cooling analytics to cope with the heat of modern supercomputing workloads. In summary, AWS IRCheck's launch is part of a broader wave of innovation addressing data center heat and efficiency. From closed-loop liquid cooling that saves water to partnerships for heat reuse to emerging techniques like immersion cooling, the industry is actively pursuing alternatives to conventional air cooling. These developments show that while companies like Vertiv and Modine face new challenges, they also operate in a dynamic market full of technological advances, which they too can leverage indeed. Modine itself has invested in immersion cooling capabilities to expand its portfolio. The heat problem in data centers has become a catalyst for innovation across the sector, and we can expect continued evolution of cooling strategies as AI computing grows.
Okay. With that being said, do you know more than you did 15 minutes ago? Have you ever seen that kind of response to a question that AI gives you immediately, and you can make a valued decision? What is my decision? I can make more money somewhere other than the shares I have in Modine right now. I'm going to believe what the analysts are saying. It will rebound. It will come back up. But it's not going to give me the kind of return I thought it was because the competition just geared up. And it's being geared up by some of the richest companies in the world who are saying the solution that the world is offering us now is not enough. And so we're going to take our money and our technology and solve the problem on our own. With that in mind, I will liquidate my Modine over the next couple weeks as it recovers from the punch in the nose it took yesterday. That's not really the message I want to deliver to you. The message I want to deliver to you is the way you invest is changing. You can have current, up-to-date, accurate, in-depth information as good as that in Wall Street, in Goldman Sachs, in Morgan Stanley, if you will access the data, if you will know what questions to ask and who to ask them to, you can become a better investor. Now, I'm doing it because I've got the money to spend to get the data. I've got the money to spend to access Samantha, and it's made a tremendous difference in my portfolio. In June, my portfolio was up 15%. Thus far this month, it's up 5%. So we may hit the 15% again. I don't know, but what I do know is I'm a much better investor than I was 90 days ago because I have access to the data. I have access to the knowledge. I know the questions to ask, who to ask them, and where to get my answers on a timely basis. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I'll be what, 81 years old in within 50 days, and my time is running out. And my goal is to make a difference in this world. And that is to bring quality information and knowledge to the retail investor so they can kick Wall Street's ass. That's that simple. Goldman Sachs spends $10 million a month to deliver what I just delivered to you. Now, you do the math. You can join me for less than $1 a day, or you can take your $10 million to Goldman Sachs and they'll charge you 1.9% interest. Or why don't you take it to Citadel and they'll charge you, what is it, 2 and 20, a 2% override, and then they keep 20% of the earnings? It's your decision. I'll talk to you again next week.